Hello, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us. So today we thought we'd talk about the economic data that we're getting coming through on the U.S. economy, and then Josh was going to talk about how we've just been given yet another example of why market timing is a futile endeavor. So last week we saw the GDP, the U.S. economy, shrink by 0.3% in the first quarter of the year. Most likely, we will probably get another slight decline in growth in the second quarter of the year. And by definition, a recession is defined by 2 consecutive quarters of negative GDP growth. So that's most likely what we'll probably see unless we get some dramatic news out of the White House, which we're not necessarily expecting, and probably too much damage has been done at the activity level. So when we look at Obviously, when you look at earnings that we're getting right now, a lot of the data we're getting is very good, but that's backward looking. Most of the data we have now was before any of the tariffs hit. And the reality is, the reason for the slowdown is we had so many C-suite executives just saying, you know what, we're going to postpone any cash spending. And so a lot of the activity that normally would have been happening wasn't happening. And that's why we saw a little bit of a decline in growth. And it'll probably spill over to the second quarter. But when you look at the labor market still doing strong, the reason the labor market is so important and why we look at it so closely, unemployment is still at 4.2%, is GDP is driven by consumer spending. And so 70% of economic growth in the United States is driven by the consumer. And as long as the consumer is still gainfully employed, they spend money. And that really has been the juggernaut that's kept the economy going strong for all of these years. And so we're optimistic about, we think that we're probably going to have some more rough data coming through on the U.S. economy, probably on earnings for the second quarter. But remember, the market will have priced a lot of that in, and we'll look past that. So, of course, there's a lot of variables out there. It's very hard to predict the future anytime, especially in the short term. But right now, it's maximum uncertainty in terms of, all of the variables that exist out there. What's going on at the White House and tax extensions of the 2017 tax cuts. And so we're relatively optimistic. We do think we're going to get a recession. Remember, recessions aren't the end of the world. They're sort of a cleansing of businesses that maybe shouldn't exist. But a lot of this is TB. Stay tuned. It changes hour to hour, week to week, month to month. And we're just know that we're going to stick to our guns. But it also is great evidence of why market timing is a futile endeavor.
Yeah, it's a great segue that time in the market and staying invested is really the only thing that you can ultimately control. And the last couple of weeks, I've had a bunch of client meetings, and markets have rallied 17% off the lows. But the common characteristic amongst all those meetings is people wanted to feel like they were being proactive. But remember, reacting in the midst of the panic du jour is precisely how you're going to destroy your long-run returns. Markets are significantly de-risked after they sell off, and one of the things that we're always constantly reminding clients of is that even if you know the news ahead of time, you're not going to be able to successfully trade it. It's been 5 years since COVID now. Remember, back during the midst of the pandemic, stocks bottomed and started rallying 9 months before earnings kept going down. So the point is that the stock market rallied significantly in anticipation of the ultimate recovery, and that's why it's so difficult to trade. We haven't had as good of an example of market timing here since COVID, but this is a prime example of even if you knew the news, you wouldn't have been able to successfully trade it. And a lot of institutions even have been caught offside, and we never really felt like the bottom was in because we didn't really sense that total sense of panic amongst our client base. So it's not to say that we're totally in the clear, but even when we are, most people out there are going to disbelieve it, which is another example of it's not a binary decision. Stay invested, make plans when things are good, and not in the midst of the panic. But the other thing I wanted to highlight was sort of the ultra politicized nature of this sell-off, and there's nothing in today's world that's more emotionally invoking than politics and the red team versus the blue team and so on and so forth. But the reason that we're here, we're an impediment to making those highly politicized, highly emotionally driven decisions that are extraordinarily detrimental to your long run efforts as an investor Don't let politics influence those decisions. In today's 24/7 news cycle, it's particularly difficult to sort of tune out those emotions, because when you're in the middle of it, it's just the complete and never-ending onslaught of negative news when we get in these silos is really tough to tune out. But for a lot of people out there, just turning off the television or putting down the phone is maybe the best answer when we're in the middle of April or one of those kinds of weeks where it feels like the sky is falling.
So remember, markets could retest those April lows and even go a little bit lower, but ultimately what Josh and I think about is where markets are going to be 3, 5, 10 years from now, and that's higher. And so that's when we're in the middle of those lows, we understand it's difficult, but remember, we know that markets will be higher 3, 5, 10 years from now, and that's what we're trying to get you focused on. And as Josh said, don't let politics cloud your judgment around your money, because that can be very dangerous. As always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or send us an email by going to our Josh or Tyler at northwestquadrantwealth.com. We'll see you back here in a couple weeks.